John Burke, with all the turbulence in the economic world right now, how are you advising your clients?
Greg, we'd like to see clients invest in things that are going to hold up in a lot of different markets. And one of the values right now is to find companies that are doing well in the emerging markets, but they're not Chinese stocks, they're not Brazilian stocks. They're companies that we know and love.
Well, one of those companies appears to be John Deere. What's attractive about this one?
John Deere is, of course, the largest chunk of their profits come from making farm tractors. Farmers are doing quite well right now because so many more people in the emerging markets, places like India and China, are eating much more. We're exporting soybean to China, so when the farmers have a lot of money, they buy a nicer tractor, and John Deere is doing quite well.
Well, people in the emerging markets are also eating a lot more McDonald's, and that's another stock you like. This stock actually sold off in the spring. Why do you still like it?
Well, it turns out that people all over the world like cheeseburgers and French fries. McDonald's is doing quite well in India now. China, they've been doing well for a while. Now India, they're starting to do quite well. And in McDonald's, we get a 3.1% dividend, and compare that to a 10-year treasury at 1.6%. We're getting twice the yield.
You're also a fan of Nestle. What's attractive about this stock?
Nestle is European, they're Swiss, but not really. They don't do any more business in Europe than, say, a Coca-Cola. Yet Nestle is about 10 to 15% cheaper because of the fact that they're thought of as a European company. They're doing the lion's share of their business is outside of Europe, and they have a large chunk of that is in the emerging markets.
Well, you have food on the shelves, food in restaurants, and food growers and food equipment makers. So what's attractive about the agricultural space, if you will, and the restaurant business?
You know, there's a lot of fear in clients right now. And, the fear gauge is back to where it was in late 2008, early 2009. So clients get comfort in buying stocks from companies that do well in good times and bad times. In fact, McDonald's, for example, was the only Dow Jones stock that went up in 2008.
This market is
stock pickers market.
Stocks have rallied this year.
We're coming into a Monday where we're going to